Sellers are starting to drop their asking prices here in San Francisco. In this video, I'll share with you what this means for you if you're thinking about buying or selling in this market. What's up YouTube? My name is Andres Restrepo, and for those of you that are new to my channel, I am a realtor here in San Francisco. In this video, I'll be discussing with you what is currently happening in this market shift and how you might be able to adjust or prepare for what's to come. So this time of the year, we're seeing a lot of headlines coming out that are quite shocking. As you all may know, inflation is at a 40-year high. Redfin, Compass, and Coinbase have already laid off a substantial amount of their employees. The S&P 500 is down 24% year to date. The NASDAQ is down 32% year to date. And crypto, don't even get me started. Bitcoin is sitting down at a whopping 57% year to date. So what does this all mean for real estate? Naturally, we're gonna have to see a slowdown. As you all may know, interest rates have hiked up considerably since the beginning of the year. We started somewhere in the 3% range. Currently, the average interest rate for a 30-year fixed is over 6%. Now, I don't say that to scare you. For those of you that are actually looking in the San Francisco market and you're well-qualified buyers, you're gonna be locking in interest rates somewhere in the 4 to 5% range for those jumbo loans with credit scores over 700 and cash reserves. If you're new to San Francisco real estate, it's very important to note that seasonally, what's happening right now is perfectly normal. Generally, in the summer, the market cools and listings get pulled off. The two main selling seasons in San Francisco are the spring and the fall, which is when we see the most amount of buyer activity and the most amount of listings coming on the market. This year, it's a little bit different. A lot of realtors are actually advising their sellers to bring their properties onto the market in the summer just because there's so much volatility and uncertainty. Now, I'm starting to notice a trend here with open houses. Currently, we're not seeing as many buyers coming through to open houses. I'm also seeing that properties are having offer dates set, and come the offer date, no one's stepping up and submitting offers. So it's causing sellers to kind of start to panic a little bit. The market is not where it was a couple of months ago, and things are starting to trend down. So in my opinion, if you've been a buyer on the sidelines, it's actually a great opportunity to actually score a deal. We know that the median price in San Francisco always peaks in the spring. So this slowdown that we're seeing with the equity markets that's translating over into the real estate market is causing prices to decline and is going to make it for a better buying opportunity. Now, it's never going to be perfect, right? And a lot of you that have been sitting on the sidelines waiting for prices to drop, for some reason people figure that, for prices to drop, it means it's going to be easier to buy. And that's not necessarily the case. As you can tell, the reason why prices are dropping is because rates are rising so aggressively. So it's never going to be like a perfect situation, but if you're able to afford it now, what I've been telling buyers is that, get that lower price, because at the end of the day, you cannot change what you buy a property for, but you can change the rate that you initially bought it with, because you're able to refinance down the line. It's super important to highlight that it is impossible to time the bottom of the market, but you can definitely time the top. And I know that we are past the peak. The peak was probably 2 months ago, and prices and demand has started to stem downwards. Here's a graph comparing May 2021 to May 2022. The number of price reductions is up 50%. And these price reductions are coming at a time in which inventory is rising. So if you're a buyer and you've been on the sidelines, take advantage of this if you can still afford to buy. Not only will you get a better deal buying right now, but you'll also have more negotiating power, and you won't have to waive all of your contingencies. Gone are the days, at least for the time being, in which you have to write fully non-contingent offers. Now, this is going to be on a case-by-case basis because there are desirable properties out there in San Francisco right now that are still selling, and they're selling quickly. So this isn't a blanket statement by any means, but given what I'm seeing right now, you will have a lot more negotiating power, and you might be able to leverage contingencies or request seller credits or use other sort of tactics that may help you come out ahead. If you're a seller in this market, it's not the end of the world. Now is not the time, though, to go cheap in prepping your home. You want to make sure that your home really stands out. It's very important when you're competing against other sellers, because remember, that buyer pool is starting to dry up a bit. For sellers, it's also very important that you price your property correctly. You don't want to be sitting at the very top of the market. Ideally, come in a little bit lower so you can at least get multiple buyers interested and get multiple offers, and then you can kind of pick and choose and see what the best one is for you. As always, if you're looking for a great agent here in San Francisco, make sure to drop me a line. My contact information is below. I'd love to hear from you. If you found value from this content, make sure to give the video a like, comment, and subscribe for more videos like this, and I'll see you in the next video.